moving average and MACD, because that is what the profit cross strategy consists of. Okay, how to apply the profit cross strategy and my final words on the profit cross strategy and everything we've talked about today. So let's dive right into it. What is the profit cross strategy? The profit cross strategy is widely considered a golden strategy due to its 70% to 80% success rate. Okay, so this strategy in the financial markets has a 70 to 80% success rate when you use it to trade. And I'll be very candid with you. I use this strategy more than any other strategy I've ever thought. Okay, I use this strategy more than any other strategy I've ever thought. The profit cross strategy is widely considered a golden strategy because of it has a 70% to 80% accuracy. A strategy that gives you 70% to 80% success rate in the financial market is the holy grail. So any trader that has a strategy that gives them 70 to 80% accuracy, success rate, profit rate in the financial market, that strategy is said to be a golden strategy or the holy grail. Okay, it's this strategy, the profit cross strategy, is a strategy that involves trading in direction of the trend in order to catch reversals and correction. Okay, so the profit cross strategy would actually allow you to catch reversals if price is turning around, and also allow you to catch correction in case price wants to continue in that certain direction. This is what this strategy will allow you to do, and you'll be able to do it perfectly. Okay, you'll be able to do it perfectly every single time you use this strategy. Now, the most interesting thing is it's basically built on the structure of how the market works. So some strategies are not built on how the market works. Some strategies are just built on possibly algorithms related to price, not how price is currently working. So the algorithm will not have to tell you what price is likely to do. But no, this strategy makes it easy for you to catch the most profits in the financial market because of it is built on the structure of how the market is working at that moment. So you'll be able to get signals and reactions from that strategy to enable you make profits instantly. That is the profit cross strategy. That is the profit cross strategy. The moving average and MACD. Before we hop into the moving average and MACD, let's still go further in depth into what the profit cross strategy is. Now, let me give you a very good life example. Now, this strategy gives you a signal. For instance, if you're driving your car and you're about to run out of fuel, okay, will your car give you a signal or not? Yes or no? Drop your response in the chat box. Okay, will your car give you a signal that the fuel is about to finish? Yes or no? I'd like to get a lot of response. Will your car give you a signal that wow, the fuel is about to finish, get more fuel? Will your car give you that signal? Yes or no? I'd like to get a lot of response on this. Okay, I'd like to get a lot of response on this. Will your car give you that signal that wow, the fuel is about to finish, get more fuel? The fuel is about to finish, get more fuel. Will your car give you that signal? Brilliant. Okay, brilliant. Your car will surely give you that signal because it wouldn't want you being on a trip and the fuel getting exhausted. This is the same way the profit cross strategy works. If the market is about to make a massive reaction, that will benefit you, the profit cross strategy will give you a signal to trade in that direction. If the signal is going to come clear, you are going to see it and you are going to capitalize on that move by yourself. Nobody's going to capitalize on it for you. The profit cross strategy will give you that signal and you are going to capitalize on it yourself. That is just how the profit cross strategy works, and that is how most strategies work. Okay, most strategies will give you a signal. The profit cross strategy, when it gives you that signal, know that it is 70% to 80% accurate in the financial market. That success rate is there for you to earn profits from it. Okay, that success rate from the signal is there that gives you a lot of profit. That is how the profit cross strategy works. It's very easy, simple, and straightforward to use, and you will see how it is. The moving average and MACD. Okay, the profit cross strategy makes use of two technical tools or two components. Okay, it has two components, or it consists of two things. Okay, it is the moving average and the moving average convergence divergence. Okay, the moving average convergence and divergence too. Now, has anyone heard of what a moving average is? Okay, have you heard of moving average? Possibly simple moving average or exponential moving average. Have you heard of what a moving average is? Or have you heard of moving average before in the financial markets? Have you heard of moving average before? Yes or no? Have you heard of moving average before? Yes or no? I'd like to get a lot of response. If you've not heard of it, just say no. Okay, it's nothing to be shy about. Not everybody knows everything in the financial markets. Okay. Have you heard of the moving average before? Yes or no? I just sent out a poll now. Please, let's respond to the poll. Okay, let's respond to the poll. Brilliant. Have you heard of MACD before in the financial markets? Yes or no? Have you heard of MACD before in the financial markets? MACD. Okay, MACD or MACD, whichever way you pronounce it. Have you heard of MACD before in the financial markets? Okay, great. Now, these two, they are the most tools that, or they are the most common tool. Every single trader knows about this tool. Every single trader uses this tool because it has components that helps you react to the financial markets better. The moving average is a trend-based tool. The moving average convergence and divergence, MACD, is a momentum tool. When you understand the trend and you understand momentum, that is massive profit for you. That is why at Eagle Global Markets, we've decided our own approach towards the profit cross strategy, different from the way everybody else uses the profit cross strategy, is to put in two tools that we believe and we understand after a series of backtesting will benefit a lot of our traders. That's why we've come up with the profit cross strategy revamped. Okay, the profit cross strategy restructured. That's what I would like to call it. Now, the moving average. The moving average is a trend-based indicator tool. Okay, trend-based, like I said, trend-based indicator tool, and it is used to determine the general direction of a trend. You can use it to determine the general direction of a trend, and I'll show you all of this on the chart. Okay, I'll show you all of this on the chart. This is a trend-based indicator tool, and it is used to determine the general direction of a trend through the use of previous price data. Now, you see, this is the interesting part. Through the use of previous price data, you see, all these two, the same way the financial market is. For you to get foresight, okay, you have to understand what has happened in sight. You need to understand previous price action before you understand what is likely to happen ahead in the market, right? Now, you see why the moving average tool is a good one for this strategy. It is because of, for you to use it, it gives you ideas of price based on previous price action. That's why I see, to determine the general direction of price through the use of previous price data. Old price data, you get to determine it using the moving average, and it gives you what will happen in the future. That's it. Sandra, you're not too late. We just started. Follow along. Okay, the moving average is the key indicator when it comes to the profit cross. Okay, it's the key indicator. This is one of the major indicators in this strategy. Okay, due to its singular function, due to just the fact that it tells us where price is going to. Okay, it tells us where price is going to, just because of this factor. That is why the moving average is the key indicator when it comes to the profit cross strategy. The components of MACD. Okay, the components of the MACD. Okay, moving average convergence divergence. This is a trend following momentum indicator, which helps traders to understand how the price of a financial instrument is doing over time. How the price of financial instrument is doing over time, in what sense? How it has been reacting over time. Now, reacting is not even based on the trend direction, the direction price is going to. The reaction is price moving fast in that direction or not? That is what you want to capitalize on. You want to trade or you want to capitalize on that fast move, because it is in that fast move you make the max profit. It is in that fast move that you, as a trader, makes the max profit. Just from that alone, just from that fast move alone, you catch the whole pips in the financial markets. Even if not all, you catch a good amount of pips in the financial market. This is a trend following momentum indicator, which helps you as a trader to understand how the price of a certain financial instrument is doing over time. It helps traders spot reversals and continuation. Like I said, it will help you spot reversal and continuation in time, which is why the indicator is important to the success of the profit cross strategy. Now, remember, moving average tell you direction, okay? Why this one will help you spot the reversal and continuations in time, so you can capitalize on that direction. So that is just the components of the profit cross strategy, which is the moving average and the MACD. Okay. Now, how to use the profit cross strategy. Before we come to how to use the profit cross strategy, let's go to our MC4 platform and let's just see the moving average and the MACD. Okay. I'll be switching to my MT4 right now, so you can all get to see it. So this was, if you can see my screen, please let me know. Okay, it's loading. It's loading. It takes a while. Takes quite a while to load. Sincere apologies for the breaking connection. I'm sharing my MT4 right now, so we can all see it. Okay, great. Now, this is the MT4 platform. And if you remember vividly, on Tuesday, when we had our session, where I talked about time and price, and I explained the AMD for everyone. That's why you see the blue boxes here, just to bring that back to our memory. I called GBP USD sell. Okay, I called GBP USD sell to sell up to this level from this area right here. And well, we had our stop loss hit before the price moves. That's why I told you, even if the strategy has this 70 to 80% accuracy, sometimes, okay, you might not be able to use it to make profits. Just like this is one out of every 10 trades. So if you take 10 trades, expect one of this to happen. Okay, expect one where there's that loss that comes with it. Okay, now let's talk about the moving average and the MACD. Let me just delete this. I use the moving average and the MACD a lot, so let's dive right into it. Now, On your MT4, okay, let's just delete this. Let's delete this. Delete. Okay, so this is basically how your MT4 chart looks like. Okay, this is basically how your MT4 chart look like. And for you to add your moving average indicator, all you need to do is click on insert. Okay, then you go to indicators. Now I already have moving average here because I use it a lot. All you need to do is come to trends, click on moving average. Just leave the period the way it is, leave it this way and just press OK. Okay, that is how to add your moving average to your chart. If you want to add your MACD is a oscillator indicator. Okay, so all you need to do is click on insert, come to indicators, and come to oscillators. Then you find MACD and you click on it. Then you leave it default also and just add it. So this is how it is on your MT4. Now let's get the chart rid of all of these things and let's talk about the strategy itself now. Okay, so I'll just delete this and we'll still go over adding it again. That's for sure. We'll go over adding it again just to show you that is where the MT4 indicators are. Any indicator you want to use, you find it under that aspect. Now let's share the slide back and talk about the strategy itself. So going back to the slide and the strategy itself. Now, how to use the profit cross strategy? Open your trading platform. The first step, open your trading platform, be it Cloud Trade or MT4. Cloud Trade, we've had multiple classes on Cloud Trade, how to add this to your Cloud Trade. We've done that before. This is the MT4 one. Okay, so you open your Cloud Trade, your trading platform, Cloud Trade or MT4, and you plot up the profit cross strategy using the coordinates below. Now, using the coordinates below, your moving average, take a pen and a paper and write this down. Okay, your moving average exponential. So we'll be using EMA or MAE, whichever way you pronounce it. Moving average exponential or exponential moving average. But yeah, it's MAE. Okay, moving average exponential, period 50, color blue. Moving average exponential, period 19, color red, and your MACD as default setting. Okay, that means you won't adjust your MACD settings at all. Now, when the moving average and the MACD line crosses above the histogram, that means it's time to buy. When the moving average and the MACD line crosses below the histogram, that means it's time to sell. Now, let me show you on the MT4 platform how to do this. Okay, so I'll move to my MT4 platform. We'll add every single thing together. Okay, and we'll see how it works perfectly in the financial markets. Okay, so we first add our moving average exponential. So we come to insert, indicators, trend, moving average. Okay, so they said period 50. MA method, exponential. Style, we said blue. So I can use any blue. Let's use this blue. So I want to see the line properly. So I'll just increase the thickness of the line. Press OK. Okay, so this is the first step. Now, the second one, 19. Okay, 19 with color red. So you insert indicators. If you have your moving average here, you can click on it also and just put in 19 in the period. Leave the MA method at exponential and you add color red. Now, just from this, looking at this alone, you can see whenever they cross up, it buys. Whenever they cross down, it sells. Whenever they cross up, it buys. Whenever they cross down, it sells. You can trade basically off this. But to get more precision, that is why we decided to add the MACD. Okay, now let's go to insert indicators, oscillators, and MACD. We said we leave the settings the way it is. Okay, now the MACD just gives a better opportunity to buy and sell. So how do you use it? They said when the moving averages cross down and the MACD crosses the histogram down, you sell. Now let me show you something right here. This is where the cross happened down here. Okay, let me add 1, 2, so I can be able to circle all those areas out. Right here, we had our cross, that gray area. I just, and this one right here. So we had the cross here, and we had the cross here. The MACD crossed the histogram down. The moving averages crossed down also. Imagine you took a sell here. You'd have made how many pips? Let's see how many pips this would be. This is 25 pips. You'd have made 25 pips. You'd have made 25 pips of this. And now, keep in mind, the MACD is still showing you down. Okay? So you can still hold your trade no matter what. This is the fun part about it. See the second signal I gave here. The cross there. The cross here. See the cross to the histogram. Yeah, crossed up. Yeah. Okay, color blue is moving average 50. Color red is moving average 19. Okay, blue moving average 50, red 19. Okay, so we had the cross here. We had the cross here. Okay, so this is where we had the histogram cross to be precise. So you see there was just a bit of difference there. And now look at it. It maintained staying up. Now imagine you bought here when the histogram crossed also. This is 57 pips. 57 pips right there. 57 pips right there. 57 pips right there. That's good amount of money just from the financial market. Let's see this. Now, like I said, you want to capitalize on the big moves, okay? On the big moves. When the cross happens, you want to make sure you are already in that trade, okay? So this cross happened here. And this happened here, okay? Now look at this. How many pips? How many pips? How many pips? This was 38. Relatively 40. Relatively 40. Let's still see more of this. Okay, where do we have a cross? We have a cross here. See how this one aligned perfectly. The moving average cross, okay? See the moving average cross right here. And see the price crossing the histogram here perfectly. This was how many points? How many points down here? 52 points. Sweet 52 points. This is how it happens in the market every single time. See how big this just, and this is just the 15 minutes time frame. This is just the 15 minutes time frame. Now imagine you see this on a 1 hour time frame. Just imagine you cut this on a 1 hour time frame. Now look at this right here. We have the cross right here. Okay, we have the cross right here. And we have it maintaining this low here. So this was where we would have entered. And look at this. This was how many points to the downside? 137 points to the downside. You could have made 137 points to the downside. 137. Now that's a good amount of people. That's a good amount of points there. Now see this again also here. Just that was the 15 minutes time frame. When we're checking all of those 30 points, 20 points, it was just the 15 minutes time frame. Now imagine you cut the 15 minutes time frame one and also cut the 1 hour time frame one. A huge amount of points. A huge amount of points right here. $163 points. 163 points right there. Now, I know you might be wondering, we are just checking this only on USD JPY. It works on all financial instruments, and I'll show you. Let's try EUR USD. Okay, this was when I was explaining last week also the Bollinger Bands. See how it works perfectly. Let's talk about what's on ground. Okay, now the same let's create this as a template. Let's just make this a template. So I can delete all the tools right here. So I can just use the template at once on that chart. Now, let's make this a template. Okay, profit cross. We already have the template. Let's load the template right here. Profit cross. Okay. Now, this is the 15 minutes time frame on ERUSD. Just yesterday, the 1st of September, you could have started your new month with a good amount of pips. You could have started your new month with a good amount of pips. Just 1st of September yesterday, we had a profit cross right here. The profit cross means you're starting the month with a profit cross. That's brilliant. Right here, look at this right here. And how many points is this? This pump right here, 53 points. 53 points. If you use 1,000 per point times 53, that's 53,000 naira. Just because you know this strategy is very accurate and works. Look at where we had the profit cross also. Just right here. Look at where we had the cross. Just right here. So this is low right here. We had 30 points. Just sweet 30 points. We had another cross here and it is still running. You could still buy ERUSD here, but do you really want to catch it when it has moved? No, you want to catch it when it has not moved yet. You want to catch it by the neck, if that's the best way to put it. You want to catch it by the neck. Now, look at this right here. Imagine you got in here. Okay, just imagine you got in here and we had the cross right here. This is the 1 hour time frame now. We had this cross right here. Let's see. This is 165 points. Just 165. This big buy move. And I'm sure right now on one certain financial instrument, I don't know the financial instrument, but I'm not sure and certain that on one financial instrument right now, there is a current profit cross that is about to happen. Now, all you need to do is just add this setup to your chart. Add it to your chart and go and look for that profit cross and capitalize. This is a profit cross that happened right now. This is a profit cross that just happened right now. And you could capitalize on it just now. You could capitalize on it just right now. Right here. This is the 15 minutes time frame. Your profits should be ranging from 20 to 30 points. Sweet 20 to 30 points. Sweet 20 to 30 points. And this should actually be able to buy higher. Just using the profit cross strategy. You see, we got one on USD CHF. Let's check the 1 hour time frame. And it aligns with the 1 hour time frame. Now, this is one thing you want to capitalize on. This is one move you want to capitalize on in the financial markets. The lower time frame, the 15 minutes already give us the buy. The higher time frame, which is the bigger time frame, is giving us the buy entry also. So you see, is one major trade you want to capitalize on. And this is how it works in the financial market. It happens every day, every time, on all financial instruments. All you need to do is find the right trade opportunity and capitalize on it. All you need to do. Okay, this pair is USD CHF. Okay, USD CHF. That's the pair. USD CHF. That's the pair. USD CHF. This is how it happens every single time on all financial instruments, every single day. Every single time on all financial instruments, every single day. There is always that profit cross that will happen. There's always that profit cross. It's meant to happen because that is how the market works. That is how the market will continue to do every single day, continue to react every single day. And the profit is there, all for the taking, all for you. Gladly sitting and waiting for you. All you need to do is just go in, search for the signal, and take the trade. So I already took USD myself. This trade right now, I took it on my phone. I'll share the results with you on the Telegram channel. Okay, so to round it up, the profit cross is one of the most popular strategy. Now, making it one of the most popular strategy, we've redefined our own. So ours is better than any profit cross you might see out there, because it allows you as a trader to profit from every single movement in the financial market, be it movement on the higher time frame, be it movement on the lower time frame. You will be able to capitalize every single trade in the market, as long as you're checking the lower and the higher time frame, the lower and the higher time frame, the lower and the higher time frame. You'll be able to capitalize on those trades. Okay, you'll be able to capitalize on these trades every single time they happen, because you will be looking for these setups. You'll not be looking for a lot of setups. You'll not be looking for these setups. That's what you'll be looking for. Okay, you'll be looking for these setups every single day in the financial market. Imagine being able, I told you guys, it's not about catching a lot of points in the market. It's about being able to catch points consistently in the market. Catch 30 points today, catch 30 points tomorrow, catch 30 points next tomorrow, and so on and so forth. That's how you are able to build your account. That's how you're able to meet that 6% target. That 6% target. Every day 6% target I told you guys about. Every week 6%, that you'll be able to meet it just using this strategy. Very, very simple and easy. Sandra, that's the link to the Telegram channel. Join using the link. Okay, it allows you as a trader to profit from price movement, because, or be it in reversal or continuation, you profit from it while providing you solid exit rules. Your solid exit rule is basically your 30 points, 30 points or 20 points, and you leave the market. Don't be greedy. You'll see another one again the next day, and it's true. And just those 30 points has protected your profit for you. The goal is to identify a reversal continuation. Is price continuing? Has it crossed? Has it given me the signal? I'll enter. Is price about to reverse? Has it crossed? Has it given me the signal? I'll enter. As it is happening, you just open a position. See how I open the position now. Then all you need to do is rely on risk management. Risk management, basically, this is how much you want to lose on the trade. This is how much you want to make on the trade. That's it. And you trial your stop. You lock your profits. You lock your profits from the move, so that you make a lot of money from it. And just so you know, even based on what I explained on Tuesday, the results will not always be the same. You make profits consistently, but losses will be incurred. Okay, losses will be incurred. You make profits, but small losses will be incurred. That's one thing you need to know. Okay, results will vary based on market condition. If the market condition you are using it in is not the right market condition, you will lose money using it. But make sure, if you're losing money, you're making money that will cover for it on the next trade. And that's how it is. That's trading. That's how trading is. So you don't expect to make profits on all your trade. No, losses will be made. Losses will be incurred. But all you need to understand is that make enough profits that covers for your losses. So this brings us to the end of today's session. I'm open to taking questions now. Please do ask your questions. Okay? Please do ask your questions. I'm open to taking questions on our side. We are in profit already. We are in profit on the trade. So this is how easy it gets. This is how easy it gets. Okay, how easy trading the financial market can be. You don't need to stress yourself looking for a complex strategy. Strategies in the financial market are easy. Be it you're trading smart money concepts, or you're trading any concept at all. Just make sure you're making profit using it. This is how it is. This is how easy it gets.